Hello, everybody, and thank you very much for joining the FX Open Breakfast with myself, Kathleen Brooks. It's been certainly an interesting weekend, and it's certainly the start of an interesting week, that's for sure. Obviously, those of you who were joining me on Friday, the big news was basically to watch the closes. You know, where did things close on Friday? Because we had a tremendous run-up last week. And actually, those weekly closes were going to be really, really, really pivotal. And what we saw in the end was a slight pullback. So we saw, looking at the Dow Jones as kind of, your ultimate indicator, if you like, purely because it had hit that 13,000 level. We saw it jump up above 13,000. It went to 13,010, but then it pulled all the way back. So I'll just show you quickly the daily chart just to show you what I mean by that. Oh, bear with me one moment. Here we go. So this is just the Friday's daily chart, so just showing all of Friday's price action on the Dow Jones. As you can see, broke above that 13,000 level at the open. Was a very, very choppy day, but ended below it, which is really, really key because I'm just going to show you another chart, something else that we were looking at. And the main currency pair in focus today, even take out euro dollar, has actually been dollar yen. Sorry. It's actually been dollar yen. And the reason why I mention that, those of you who join me on Friday will recognize this chart, should recognize this chart. It is actually the dollar, so it's dollar yen, it's the weekly cloud, so the weekly Ichimoku cloud. This level here, so 1894, was a really pivotal level that everybody was watching. So as you can see, on the weekly close, yes, it did get above there. It's been as high as 81.65 today, so it even got above that 81.50, which is a key barrier level, but it hasn't been able to hold on to those gains. It's currently now around the 81.10, 15 mark. I'm hovering around there, but we're really watching for that 80.95. So obviously 81.50, a bit too much for it in today's environment, literally in today's environment. It's come back. However, 18.94 has held, and that's what we're watching now. Anything above the cloud, for those of you not familiar with Ichimoku analysis, I know it looks like a whole load of lines and everything else going on, but it's really one of the simplest indicators. Above here, so above this green line here suggests uptrend. Below it suggests downtrend, and in the middle, no trend. So as you can see, kind of, after making a low around that 76, we then just kind of bounced higher. And obviously now 80.95, 94, 95 is the key support that we're all looking at. We seem to have held up. 18.95 has been the low today, so that has held as support. But obviously we are just a little bit more cautious at the open today. Now, I also want to show you, bear with me one moment, some euro crosses, because they're kind of always also kind of driving a lot. Today. Now, bear with me a moment. So as you can see, this is euro dollar. So euro dollar has been as high as 134.78 today. That's been the high, so just below 135. So a really strong. Now this is the daily chart. So as you can see, uptrend very much still in place above that 100-day moving average, which we spoke about last week, and that kind of 133.30-ish zone, and that really led to a kind of another move higher. Now, what I did mention last week was that we thought around the whole numbers things would get a bit sticky. Indeed, they certainly have, especially around that kind of 130, around that 135. We've seen kind of a trepidation around there today. But we're basically just as we surged through that 133.40 level, it was right really to think that we could then target 135. On the shorter term chart, so as you can see, really nice run up in the last couple of days, but again, a little bit of congestion. We've gone from 134.78 to just below 135, finding very good support around this 134.50 level, which is going to be important. It's going to be important for us to hold this 134.50 level. Obviously, we've seen a bit of, a fairly strong Asia performance in Asia and then as Europe's come in, it's kind of pulled back a little bit. That tends to happen, right? Those of you who sometimes look at that, especially on a Monday after a big event like the G20 meeting, there's kind of two things pulling the market. So on the one hand, which is kind of driving all this technical action, on the one hand, you've got kind of quite negative G20 meeting, really. Absolutely no commitment to further funds. But then on the other hand, you've also got this huge liquidity drive, this massive push of liquidity coming from the ECB on Wednesday. So, where do markets really go? I mean, that's good enough reason, usually, a giant liquidity injection for risky assets, be that, the euro, stocks and whatever, to rally. We obviously have seen the euro rally today, kind of following on in that theme of the ECB's loans being kind of euro positive, even though it's extending its balance sheet, because it's taking off, because it's removing credit risks from some of the peripheral countries. It's actually not currency negative. So you can't look at the ECB's LTRO in the same way as you can QE in the US. It's a completely different beast. You're barking down the wrong tree if you do. That doesn't necessarily mean LTRO is the be-all and end-all, but while it removes credit risk from Italy and Spain, i.e. their bond yields are falling, that should be fairly euro positive, we believe. So basically, that's still happening at the moment. European and Spanish bond yields are at their lowest levels, multi-month lows. Right now, we are taking an absolute breather, along with us, the rest of the market. So whereas we saw kind of a big run up in Asia, just going back to that point really, since Europe has come in, they've added a bit of a bearish tone. But interestingly enough, some really key levels are still holding as good support. That'd be 134.50 in euro dollar and 80.95 in dollar yen, as we mentioned. And they're the real kind of levels to watch. As you can see though, I just remove some of the lines that I've been squiggling since I've been here. As you can see though, there's on a shorter term basis, so you're using the hourly, there's some good stages of support down here using the moving averages. Added to that, let's take a look at the RSI. What's this telling us really? Obviously, as we hit that kind of 135 high or spiked up to 135, as you can see here, we were in overbought territory because the RSI was way over 80. It was like way over 70, which is considered overbought. It was kind of at that 86 level. Since then, we've seen kind of a bit of kind of a shock. It doesn't look too much similar to what's going on here, but it is following the same old direction. So we haven't had a divergence in the RSI at all. So the RSI obviously an oscillator, a really good long-term indicator. So as you can see, it was massively overbought at 135. Profit taking went up a little bit more, came down some, and since then has kind of found its feet. But it's looking slightly weak on the shorter term basis because what we've basically seen is a series of lower highs. This is just on the very, very short term basis. If we take a look at the daily, still very much an uptrend, as this would say. Now it does suggest that it's turning over a little bit, and that agrees with this price here. So really it just shows that kind of, price seems to be right at the moment. There doesn't seem to be any divergences between what the oscillators are telling us and what the prices are telling us. But I am, just on the shorter term, I am a little bit worried about this, purely because we have had, you can just about see it in this chart. You can certainly see it there. Again, just a series of kind of lower highs. That 134.50 is now being tested. If we get below there, you'd look for a pullback to kind of 134.10, which is a 55-hour moving average. We don't think that we'd then go and retest that really key level here at kind of 133.50 or 60. Now we think that we'd kind of oscillate around here, but basically a deep pullback might be in store, largely because we've had kind of quite disappointing G20. There's also, the LTRO is coming out, so that should support any type of decline, so it may just be a normal pullback. But as I said, for this morning, things are looking slightly bearish because we are testing that 134.50 level. If it doesn't hold as support, then it suggests a kind of in the short term anyway, a deep pullback. And as I said, watch out for that 134 level. That's going to be really pivotal because it was such a kind of a joyous moment last week for the Euro Bulls when they broke above it. They've been testing it for so long. And that's the same as 133, that it would be, once we got above that kind of 133.20 mark, all eyes were really on 135. So it's kind of worth looking out for that. Now, the other thing I want to show you is Euro CAD. Again, fantastic run up. Very similar, really. Similar reaction or similar kind of price action to what happened in euro dollar. Again, it started to look overbought, and that's what's pulled it down. Now, the fact that this is across euro, we've seen kind of overbought prices across euro crosses. Suggests to me that this is just a normal pullback because people are taking profit. Because obviously, some indicators had gone into overbought territory. It's done the same in the euro dollar chart as we just saw before. And then we may kind of pull back a little bit. Now, what we did see, what we are seeing though is a bit of congestion. So we're seeing an awful lot of congestion, but we think any kind of pullback to around that kind of 134, kind of 134.30 area in EuroCAD could actually end up being quite a good buying zone, unless of course something in the bigger picture moves. We'd probably look at kind of 134.10 to 30 really as a buying zone. Obviously, if it was to fall below 134.10, then we probably would think that was some sort of deeper correction. Likewise with euro dollar, if it falls below kind of 134.30, again a deeper correction. But any kind of move back there, so if we get another kind of drop, we keep testing it and retesting it. We think that in the very, very short term it could be a bit bearish. We could fall a little bit more or have a normal pullback. But then going forward, we might kind of bounce off there. As I said before, like the fact that the two RSIs on euro and euro CAD look overbought, it's a telling symbol. Now let's also take a look at euro sterling since we're on the euro crosses, and then I'll take a look at cable. Oh, bear with me. Sorry, my chart is playing up a little bit. So this is euro pound. Sorry, and as you can see, found its feet. Very much found its feet at this level here, the 84.70 level. Had a bit of a pullback, tested 85 last week, came off that, but hasn't been as badly affected as some of the others. But just draw your attention really to the RSI here. That should act fairly good support. So it suggests that the 84.60 to 75 area is probably a very good support zone in euro. So what we're seeing at the moment are these strong run-ups on the shorter term chart, mixed with this kind of sideways movement action. So you could actually say that there you've got kind of a continuation pattern triangle. Sorry. Now, we are getting to quite a pivotal zone in this. If we don't manage to break above that kind of 84.80 zone, then we may not retest 85 today. Likewise, if we break below 84.75 or 70-ish, then we may retest 85.50. But there is some very good support on the way down. So there is very good support here, 84.50, which is also your 100-day moving average. Sorry, your 100-hour moving average. I do apologise for that. And that would also work quite nicely, match quite nicely with the RSI. So there's a support level on the RSI. Great. Well, I hope anyway that we could essentially see just below 84.50, so about 84.45. We could essentially just see some good resting support there, which is your 100-hour moving average, as I mentioned. But as you can see, kind of a bit like with the other euro crosses, there's an awful lot of support on the way down. So that is also worth watching out. But this really, really good support here on the RSI. We're going to be watching that. This is something certainly to watch. Now let's take a look at the cable rate. Sterling, I've been talking to a few people about sterling this week, and they've very much really been more of the kind of opinion really that, and I certainly join them in this, that sterling is very much a wallflower. Not too much going on. And it's not really being driven by itself. It's not really being driven by itself. It's moving much more on the back of kind of other factors, say what's going on in Europe, overall, the overall kind of market environment, if you like. not really moving on the back of what's happened what's happening in the UK. So let's just look kind of at this again. Very, very similar price action to what's happening in euro and the other major crosses here. So we've seen a high today in sterling of 158.62. So that was kind of around there. We did test kind of 159, or we did get to kind of 158.79-ish, or 80-ish on Friday. Didn't manage to sustain above there. Again, everything was moving into overbought territory at the end of last week, and that's what we're seeing at the moment. This is profit taking. This kind of taking profit, backing away from those big areas, because obviously, we've already, obviously we investors are still in an uncertain, the investors are in a bit of an uncertain environment, so they are pulling away from those big numbers. They are booking profits where they can. Now, this was something we did point out, over the last kind of couple of weeks, as we've seen risk assets rally, is that, okay, sorry, just one thing to note for those of you who are interested. HSBC have just announced their earnings, and their net income was actually stronger than analyst estimates. So by 0.3 billion was stronger. So it came in at 16.8 billion. Analyst estimates were 16.5. As I get a few more things out there, then I'll let them know. Okay, there seems to be a bit of a private conversation going on here. That's okay. That's no problem at all. But I know someone's asked me to look at gold, so I will do in one moment. I just want to say that right now, what we're seeing in the major crosses has been very much kind of your normal kind of pullback, so your normal profit taking, and that's the same with dollar yen. Here we go, we're in kind of oversold territory, or overbought territory, sorry, with the back. Obviously there's bought for cable at 158.50, but then you go down all the way to 158. So it could be a bit of a kind of a sharp drop lower, purely because we had such a sharp move up, that it would be very normal to kind of retrace some of that movement before we move higher again. But again, looking at it from kind of the, looking at sterling anyway, I mean, you could argue double top there on 159. Sterling, has obviously got some of its own problems. We are going to have a budget here in the next couple of months as well. And, sterling, I guess, has been kind of slightly unloved relative to some of the other, crosses, maybe potentially because it's been neglected a little bit. We'll have to wait and see. But on the daily chart, we are a little bit worried about that. That 200-day moving average at 159 is proving really, really tough resistance, and that essentially, until we get through it, that could be an inverse head and shoulders. We don't know yet. We need to watch out to see where it goes. Shoulder, head, shoulder. We're not 100% sure. It hasn't been able to bust above it yet. So we'll be watching that very, very closely. Daily chart. And again, those head and shoulder patterns are really, really difficult to point out. But we are aware of that. Someone's asked to look at sterling yen. So while I'm on the sterling cross, I will, and then I will look at gold. I haven't forgotten that. So again, sterling yen, it's kind of the same story with all the yen crosses, really. We've seen, such a strong run up. Someone here is looking at it, should they expect a pullback, potentially before you get some more upside. Well, that's exactly what it looks like here. We made a bit of a test of, getting quite close, like 129.70, 80 area. In that 130 zone, as you can see up here. Overbought territory though. Do watch out. It looks exactly, like we are moving, like, everything else, that we are moving into a little bit of a, we are moving into, some profit taking. So let's look at, in terms of profit taking, you really have to look at the shorter term chart. Obviously 128 is a key level, because with every kind of yen cross, those 128, like 50 pips tend to be, a really important, increment that things go up and down in. Obviously, that's the same for many, crosses, not just for the yen, but particularly for the yen, actually. For those yen crosses, the whole numbers in the 50s, tend to be really important. So we've got kind of 128, and then below here, as you can see, an awful lot of resting support. So we've got kind of 127.70, and then you've got about 127.30, and then kind of 126.70 to 80 here, which is your 55 and 100-hour moving averages, so a cluster of moving averages, which should be used. I mean, again, if we were to get anything below kind of 126.80, I'd be a bit worried that maybe this is a bit of a deeper pullback than what we thought. But obviously, our ultimate resistance is going to be this 126 level, which also coincides with the 200-hour moving average. But we don't really want the full retracement of this move, because that might make it very difficult to retrace again. We'd probably look for kind of some sort of support to come in around 128, and if not 128, then maybe kind of 127.30 to 50 for this kind of trend to remain in place. But remember, kind of take here. I mean, support on just using the RSI suggests that there probably isn't that much more of a pullback that we need to see right now. But I would be wary. I would kind of watch it. I would certainly look at that kind of 128 level first. So it certainly is worth looking at. The RSI not telling us too much, just showing us that we were in overbought territory again, and that this is profit taking right now, which is kind of what we're seeing on there. Okay, so someone's asked for Aussie dollar. Let's just get all the currencies out of the way before we start looking at gold. Aussie dollar is, again, just so choppy. It's exactly the same type of reaction as everyone else. It's held up fairly well today, though, compared to some of the others. Euro dollar's just made a new low for the day, below 134.30. So as I said, now look for that support to come in at 134. We've seen quite a sharp deterioration in euro dollar actually since the open in Europe. What we are seeing here, again, very, very similar in Aussie dollar. We've seen exactly the same. Obviously, it's except that it's going down. We haven't seen fantastic performance from Aussie dollar. Even if we take a look here, it really has been a series of lower highs. It's come off those highs. Now, some of that could be potentially because of problems in, or domestic problems within Australia. There's obviously been some political issues. Can be overall kind of market nervousness. People are, more willing to, take profits in Aussie because it can be such a volatile currency. But the one thing I would say is that Aussie usually leads kind of the risky FX. And the fact that it hasn't right now is slightly worrying to me. Obviously, there is good support around this kind of 106.10 mark. 106 in the past has acted as really good support in the past as well. So do watch out for that. That's on the daily chart. On the intraday chart, yeah, again, it's kind of similar, obviously 106.50. But then 106 held us really, really good support during this decline. That's kind of down here. So if 106.50 doesn't hold, then we're in a bit of a longer pullback, and we could actually get below. And we're currently, in dollar yen, we are actually below the cloud now, so we are below 18.94. But we're testing it anyway. So let's just watch out that. I think if we get below 106.50, it could signal to me anyway a deeper pullback across some of the risky crosses. So let's take a look at gold. The person who asked to look at gold has been incredibly patient. Thank you very much for that. So again, with gold, things are moving in the same direction right now. That's one thing that we have seen. Risky assets are all moving together, and we have seen kind of we've seen that kind of inability to stay above 1780. Very much kind of fallen or been jostled around with what's gone on kind of Friday afternoon, or Friday New York session. And also this kind of Monday morning blues feeling that we've got in the market today. Obviously it is testing 1770 here, 1770, which is the 100-day moving average. Now I just want to show you my Bloomberg chart on gold, because that is a good one. Just bear with me one moment, I'll have to pull it up. Take off my camera, hang on. Great, let's just take a look at this. So this is just your candlestick chart. Oh, I can't see it. Great, this is just the candlestick chart, the daily. Again, well above all its moving averages. So above, the key support levels of note. That 1780 to 90 zone proved a little too hard. Obviously on Wednesday we were looking to get to 18, and it didn't just get above that 1780 level. It's since come off there, but it hasn't really fallen sharply. Now remember, 1750 is going to be really key resistance. support, sorry, that's going to be there before 1700. So this is a little bit, just use my annotators, 1 second. Uptrend very much still in place, that's for sure. It could be a bit of a short-term triangle. We could pull all the way back to kind of 1750, or 1755 and then bounce back. So 1755 is the first support of note. And one that, again, if this is just regular profit taking, that's where we would expect them to fall down to before kind of bouncing higher. And now the other thing that I wanted to show you was just the DAX. Just bear with me 1 moment. Right, so just wanted to show you the DAX really quickly before we go. Obviously, Europe, a bit of a pivotal moment for growth, obviously a pivotal moment for the Eurozone crisis. The DAX has, again, done really, really well, but it did fail at that 7,000 level. It didn't manage to break above there, a bit like we saw with Dow Jones. Instead, we found really good support of 6,811, so just 200 points below that 7,000 mark. Finding really good support there now, currently at 6,820, around that 6,800. If we can stay above there, and that could potentially suggest to us that we'd move higher and retest that 7,000 level. If not, then we'd be looking kind of 200 pips low or 150 pips lower from where we are at 6,650. So these are kind of levels to watch. As you can see, this is just the volume chart at the bottom here. Not really telling us anything. We've been fairly normal, been about average for the past year. So we haven't seen a massive jump up in volume, which could make the 7,000 mark or a surge to 7,000 hard to achieve, but certainly worth watching. We have got a lot going on this week. We've obviously got the ECB LTRO auction on Wednesday, and I've just heard that we'll get that starts at 10 a.m. UK London time. The other one that I'm looking at is we should start getting the results at 10:20, so that's worth watching. Obviously, the other thing to watch is, of course, the EU summit in the last part of the week, so Thursday and Friday, and that really is worth looking at, and does and is kind of really that's going to be important in terms of kind of the macro side of things. Someone's just asked what chart am I looking at? Well, it's the Ichimoku cloud, so it's the same. It's the same chart that I looked at earlier for the dollar yen. So Ichimoku, as I said, obviously based on Ichimoku, the DAX very much in the ascendancy, so in an uptrend right now, even though it is finding support at the 10-can line, which is the peak line in the chart. It's certainly an interesting indicator. Not all, you usually need to get a charting package to look at it, but it's just worth knowing about it, because sometimes you'll hear numbers like, oh, it's the cloud level, it's the cloud top, it's the cloud base, in technical analysis, and it's sometimes just useful to have a bit of an idea. You can get really good explanations about all of these things from like your Wikipedia, and Investopedia and such like. They do kind of really well. But overall, the macro environment is a little bit less certain than some others, so it is kind of worth looking at. It's worth paying some attention to that this week we could actually see more of a kind of this week we could actually see some more uncertainty until we get until we actually get that ECB auction. Now, funnily enough, this time last week we saw exactly the same thing happen. After a big kind of weekend meeting, we saw markets sell off on the Monday, only to pick up later in the week. So we don't know then. We may pick up later in the week as kind of the ECB liquidity is considered a good thing. We'll have to wait and see. Okay, everybody. It's 8:30, so my time is up here. But thank you very much. I hope you found that useful. I'm actually going to be on vacation for the next couple of weeks, so this will be my last webinar until until Monday the 12th of March. So please put that in your diaries as the next FX London Open Breakfast is Monday the 12th of March. Okay, everyone, thanks so much. Have a great couple of weeks trading. I'm sure it'll be incredibly interesting, and I'll have tons to catch up on when I get back. Okay, bye-bye.